According to supply managers in the 9 MidAmerica states, how is the economy performing?
Our June survey of supply managers in the 9 MidAmerica states, the overall number, the overall index, bounced much higher above growth neutral, in fact, to an index of 50.3. Of course, the index it ranges between 0 and 100, with 50 above growth neutral. But I'd have to say this only indicates an expansion from last month's low reading of 43.5. That's in May. So this is a good movement, but again, we're not even close to being back to pre-COVID-19 levels. So it's a good number. It makes us feel a little bit better, but it certainly indicates there are many challenges, and have to see many more months of above growth neutral readings to get back to pre-COVID-19 levels. And here I bring up the overall indices over the last 18 months. There in blue, you'll see the overall index bounced much higher. The overall in red there, you'll see the U.S. number, which is slated to come out later on this morning, and you see it's well below growth neutral. I expect it to potentially bounce above growth neutral as well. But again, we're only talking about compared to last month, that's May, and so we are seeing a number that's better than May, but still we've got to see many months of above growth neutral readings before we can really feel good about this part of the nation's economy.
What were the hiring trends?
The hiring index was not good, still well below growth neutral. June's number was 38.9. That's that's down from May's 40.0 and up from April's record low 26.2. Even with the numbers at least moving above April's record low reading, we're still down about 1.2 million jobs in the region, and most of the states we're hovering around 9% loss of jobs since COVID-19, and that would be in the middle of March. So the region's down about 1.2 million jobs, and in most of the states between 9-10% loss of jobs. And we ask about hiring expectations for 2020. 51% of the businesses that we survey, the manufacturers that we survey, said no changes for the rest of the 2020. 17% of the businesses and manufacturers said they would bring back furloughed workers, and 26% said they'd bring back furloughed workers and make new hires, and 6%, that's a very small number, indicated they would continue layoffs. So that's the bad news. So 94% either no change, or they're bringing back furloughed workers, or in fact some increasing hiring.
What inflation trends are you noticing?
Inflation ticked up the overall wholesale reading. June's number was 59.7. That's up from May's 48.6. But this is again a comparison to last month, May. And I don't expect inflation to rear its ugly head, in this case maybe a pretty head, for the rest of 2020. This is just 1 month, indicating even with the June reading well above growth neutral at 59.7, again up from May's 48.6. That's still in a range of modest inflationary pressures. I expect more deflationary pressures than inflationary pressures for the rest of 2020.
What is the impact of coronavirus on the economy thus far?
We ask about the impacts of COVID-19 impacts on the businesses. 47.2% indicated they're working from home. 38.9% said no change in pay. 19.4% said they'd had pay cuts. 13.9% said they'd had benefit cuts. And when it put it together, about 8.3% indicated they'd had pay and benefits cuts. And when we ask about frozen pay, 11.1% indicated that their pay had been frozen. Now we ask about work hours, and 8% said they'd had work hours increased, and I'm almost an equal, actually 8.2 indicated they had their work hours reduced. When we look at exports, and this is a real drag for this part of the country, exports are very important. The export number was up, but still very weak. I'd call it frail. 26.4, up from May's record low of 15.9. When you look at imports, they were down 30 at 32.0, down from May's 36.0. So what you can say is the global economic slowdown is hurting exports, and the U.S. domestic recession is hurting imports. So trade numbers are very weak for the month of June.
What does the MidAmerica economy need?
Much like last month and the month before, we need a vaccine. Without a vaccine, we're going to continue to have some issues, and we'll move along. I would say bumping upward, but I could characterize it as negatives are getting less negative. We need to also see a reduction or elimination of tariffs, and we need to see more immigration into the U.S. So we're now restricting travel between Europe and the U.S., China and the U.S. That really hurts the economy. A third thing I think we need to see is at the end of this month, the $600 per week of federal support for unemployed workers, that's unemployment benefits. We need to see that end and replace with infrastructure spending. That infrastructure spending would encourage more growth, whether that's spending on roads, bridges, airports, waterways, and ports. That would be good. The $600 per week of unemployment benefits on top of regular unemployment benefits means that many workers are getting more now to be unemployed better than being employed. So we need to incentivize work and not incentivizing non-work. So that's what the economy needs looking ahead in the next few months.
What are some areas of risk that we need to monitor?
Looking ahead, keep an eye on the yield. I know I've talked about it a lot. On the 10-year Treasury, it's now bouncing between 0.6% and 0.7%. This just indicates a real great fear out there among investors. So they're willing to accept these very low rates of interest, that's globally, and even though inflation is above that 0.6 to 0.7% negative rate of return when you adjust for inflation. Jobs report tomorrow, big important number. The June jobs report, the unemployment rate I expect to come down. I expect employment to, we may see an increase. It'll be a slight increase in employment, if any. Could be some job losses for the month of June. That's going to be very important. If we see a good number, that meaning job growth anywhere between say 20 and 100,000 would be a very good number. Unemployment rate coming down by anything like 0.2% would be a good number. Keep an eye on first time claims for unemployment insurance. That comes out every Thursday. Of course, that's tomorrow. That's the continuing claims. Look at the continuing claims. Also, first-time claims are all very important as well, but continuing claims are still much too high. Then keep an eye on Creighton's Rural Main Street Survey, which comes out July the 16th. That's going to tell us a lot about the rural economy, of the agricultural economy, with the $16 billion of support. And finally, gold prices. Gold is now, we're seeing investors buying gold because of higher risk perceptions, moving towards safe haven, and I don't think it's necessarily a safe haven, but that buying gold is pushing up the prices. We're up to their highest level in almost a decade. Gold prices now, since COVID-19 in March, middle of March, when we really saw it hitting the U.S., up by $174 an ounce, and that's about 11% increase. So those are things to keep an eye on over the course of the next month. That'd be July. Until we meet again, the first business day of August, may your economic cup runneth over, and thank you for joining us today.